Good morning, good afternoon, good evening, wherever you're joining us from today. And welcome to CDSB's very last webinar, which will connect all of our work to date from climate through to water, biodiversity, and social issues. So we're really going to be talking about the interconnectedness of the topics CDSB has covered over the last 15 years today. So thank you for joining us. I have possibly the best panel we've ever had at CDSB on one of our webinars. All my own team, and I'm so delighted that they're here to share their expertise with you today. So we'll lead off with Ravi Everdana, who is our technical director, followed by David Astley, who is going to talk to us about our climate work, followed a bit later down the agenda by some social issues. We'll have Sundip come up to the plate, and he will run through our accounting for climate work and make some important connections there back to the back end of the report. Really are you a going concern, and does this stack up? And then Laura's going to run through some of our really other important work around water biodiversity. We'll then talk about social issues, thinking about the connectedness of all of these as we work through the dialogue today. And at the end, we're going to look to the future. What's next? What does reporting look like in 5, in 10 years' time? And what actions should you be taking now? So without further ado, I'm going to invite Ravi to come on board. And Ravi, we tackled CDSB very much in silos, really. The market was leading on climate change. In 2007, think back all the way to 2007. We just really got greenhouse gas protocol going, right? We couldn't even agree on, investors couldn't agree on what they needed, regulators couldn't agree to what to regulate on, and companies had no idea where to get started reporting. And climate was where we were pointed. Climate disclosure standards were a bit obvious, but that is where we were set out to go and tackle. But actually, we very quickly realized by market push and demand that we couldn't just stop there and needed to go further. Why was it so important that we addressed all of these areas and not in silos from a enterprise value or financially material perspective?
Well, fully loaded question there. Thanks ever so much. So what we're ultimately talking about here is material information for the investor, and as Mardi has just alluded to with regards to that question, it has been an evolving space. Initial focus really from a CDSB perspective was on GHGs, greenhouse gases, climate change. And then in 2015, following that, market feedback, but also an evolution in the science as well, that there are other sustainability matters which pose a risk to the company over the short, medium and long term. And those sustainability matters need to be reflected within our framework. So, over the years, we've amended our framework from GHGs to cover off all environmental factors. And then later on, I hope my colleague David will be discussing about the evolution of our framework even further to cover the full plethora of E and S, so environmental and social. And it's really important, from the onset that we talk about, connectivity here. And just for those, the audience members who don't really know about our framework really lifted a lot of wonderful things from the IFRS Foundation, IASB. So its principles, you can literally just compare our principles like for like. We're very much interconnected here, and the actual reporting requirements, one of them is around very much one of the principles is around connectivity of all of this information. And it's really important that I just build upon this narrative. So from a climate perspective, there are deep linkages with social, for example. So for example, if a company has made a commitment to actually get out of the really dirty, a really carbon intensive business sector, they also need to be very considerate of the ramifications of their workforce, how they're going to reskill their workforce into that new business line. It could be a new green energy business line. So one just needs to be very cognizant of connectivity of information within the actual mainstream financial report, the report which includes your financial statements, which includes information to the investor. And it's now, there's growing appetite from investors to actually now include information about sustainability risks and opportunities on the business. So there's connectivity not only within the actual themes themselves, such as climate and social, as I just mentioned, but also a connectivity from the narrative back to the back half, where you have your profit and loss, your balance sheet, cash flow statements, and notes. So really, what I'm stressing here is that a company ultimately should be thinking about this in its entirety as a whole document, so that you're going to the investor in a clear, consistent, and overall picture of the risks and opportunities which are faced to your company, so that an investor can pick up the annual report and really have a very clear understanding from start to finish of how everything fits together. So hopefully that addresses your question there, Mardi.
Absolutely does, Ravi. And it made me remember back to this. One of my very first meetings I had with a policy advisor, where I went in and go, really like your work, Mardi. Climate feels like a bit of a bit issue, as it's not connected to the rest of the environment. I went away and went, well, he's got a point, but he should still talk to me, And we went off and wrote in the rest of the environment, then only for TCFD to come along for everyone to want to talk about climate again. So it hasn't been the easiest ride on subject matter, but I'm not going to dwell on that, because we really did. We were a long way ahead of our time at CDSB, and still do push the market on what is leading practice on climate change. I'm going to invite my colleague David Astley along to talk about our climate change work and kind of what we've been up to for the last little while, and give you some good links and tips and pointers. David, the floor is yours.
Thanks, Mardi. I think first it's quite good to kind of just frame this around the kind of relationship between business and climate change. And, over these last few years, we've kind of increasingly seen that businesses are understanding climate change as a risk and also as an opportunity. And that goes hand in hand with the ever-growing understanding of the realities of what the physical impacts of climate change might be, both locally and kind of globally, and also what is required if we are to kind of meet those kind of Paris Agreement targets of kind of limiting climate change. That's the huge scale and speed of transition. And in hand with that, we've seen the mainstreaming of climate reporting. A big spur of that has been the TCFD. And we're seeing companies kind of report on these kind of very eye-catching ambitions. It seems like every other day we're seeing a new company kind of say they're going to be net zero by some date or another. But in hand with that, we're also seeing a kind of gulf opening up between what's kind of being stated as an ambition and as a target, and the actual actions that are required. And that's not just on a company level, that's on a government level too. Everyone's guilty in a way, but we're as this crisis unfolds, we're also seeing that demands from society and investors are kind of increasing upon this issue, and the scrutiny of corporate reporting is ever growing. And that's both those kind of targets I mentioned, but also the back end, which we'll come to in a second. And, I think it's really worth reiterating that this level of scrutiny, this level of demand is only going to increase in the coming years. And that is, because of that speed and scale of the transition that's required, but also because the scientific understanding of the crisis is ever growing. And, it's notable when we look back 10, 15 years ago to what the IPCC was predicting, and we look to what it's now predicting. And, it's a pretty obvious track that the realities are increasingly worse. So on that positive note, if we can turn to what CDSB does and corporate reporting. So just to give a bit of a 101 about the CDSB framework, it is composed of 7 reporting principles and 12 reporting requirements. And as Ravi mentioned, the CDSB framework very much draws from that kind of like mainstream financial reporting model. And, when you look at the principles, you hold them up there with what's in the conceptual framework from IASB. It's, it's near word for word in some instances. And when we also look at what CDSB asks companies to report on, you'll notice the kind of those key areas that you'll see in every company's annual report. So that's the governance, that's your strategy, that's the kind of targets you're going for, that's the risk management side as well. And what our ambition is with climate, as for other kind of environmental and indeed social issues, is that we want to see companies integrate this within their mainstream report and with the rest of their business information. If this is a material issue for companies, it should be treated and reported on just like any other material issue. And CDSB have been parroting this line for quite a long time. We've been developing lots of technical resources to help companies out, and really, the TCFD, which has really kind of shifted the market on these issues in the last few years, really did borrow from what CDSB is doing. In many ways, we kind of laid the groundwork. And that's obvious when you compare what CDSB's got in its reporting framework and what the TCFD offers in its 11 recommendations. But when it comes to climate, CDSB hasn't rested there just when the TCFD arrived. As well as our framework, we've produced the climate application guidance, which has then been rolled out to other issues, which Laura will come on to later. We've also worked with kind of the other voluntary framework providers in the area, so someone's like SASB, to develop kind of like further guidance on how to combine CDSB's framework with SASB's metrics towards high quality TCFD reporting. And we've also been developing thinking, for instance, most recently around net zero, what companies can do there, giving explainers, and very excitingly, we're developing that back-end reporting as well, around climate accounting.
That is very exciting, David, and I'm pleased that you brought up all the technical resources that are being developed, because it's been quite a journey, because you put out a framework and you put out all of this good guidance, and everyone's still, the questions we get asked most often are, what does it look like and how do I do it? And that leads me nicely on to Laura. Laura, we expanded our framework to cover environment in 2015. Again, we were still well ahead of our time. We had to not quite make it up. We didn't have an awful lot of material out there to draw from when we did it. And so more recently, we've had, a huge number of people coming to saying, how do I do this water, how do I do water disclosure? How do I do biodiversity disclosure? So over the last 18 months, Laura, our environmental specialist at CDSB, along with Francesca Riccanti, who is off on maternity leave at the moment, been working really, really hard with some global expert groups to bring together some, quite frankly, brilliant guidance on how to report water and biodiversity issues in your mainstream reporting accounts. Laura, please tell me everything I need to know about this guidance.
Thank you, Maddie. So as we mentioned, we have the climate guidance, but now we also have the water and biodiversity guidance. And the aim is to assist report preparers in the disclosure of material water and biodiversity-based information to investors via the mainstream report. So if you're interested, the links on the slide, we'll put them in the chat as well. And just to note, there's also e-learning courses that are available on the TCFD Knowledge Hub, which is kind of a condensed version of the information that's quite easy to access. So just moving on to the content on the next slide, please, Julia. Each application guidance covers 6 different reporting areas which are aligned to the TCFD framework, which David took us through. So the ones we cover are governance, policy, strategies and targets, risks and opportunities, environmental impacts, performance and future outlook. And for each of these requirements, there's a disclosure checklist, detailed reporting suggestions, references to external resources and examples of good practice from corporate mainstream reports. There's also lots of other useful resources such as roadmaps, which can help guide through the disclosure process, split into the level of maturity of the organisation that's reporting. So the guidance includes key characteristics on both water and biodiversity that organisations should consider when preparing their disclosures. These need to be considered because they add complexity to the process and are slightly different to climate in particular. And they also help to understand how to report in an integrated manner. So I'll just run through a couple of these examples. So first of all, we have the spatial dimension. That's the fact that both biodiversity and water is location specific, in biodiversity, certain areas will have a lot more valuable biodiversity and species and ecosystems than others. And similarly, issues with water depends on the particular water basin they're located in. There's also the time dimension. So both biodiversity and water impacts and dependencies vary with the natural dynamics within across the years. So this could be due to species migration in the case of biodiversity, or for both biodiversity and water, it might be due to seasonality. And this creates complexities when trying to apply these concepts to accounting frameworks and accounting timelines. And the next one is engagement and collaboration. So both biodiversity and water are shared resources with other stakeholders. That means it's necessary to engage and collaborate with external stakeholders, especially throughout the value chain, because a lot of impacts will be contained in the value chain. And that again creates links to social, showing how they're all interconnected. So finally, the part we're here to talk about is the interconnectivity between the different natural capitals. This is really important because different natural capital elements have shared impact drivers, and this means that changes to one natural capital can compound changes in another. And there are also synergies and trade-offs between different management responses that organisations need to consider. I think the best way to exemplify this is through an example, which is on the next slide. So on the left-hand side of the slide, we have different examples of drivers of natural capital impacts, such as land use change, resource exploitation, pollution. The example that I'm going to use in this one is for the pollutants being released in a local river accidentally by an organisation. And this will create environmental changes across a number of different natural capital elements. So from the water side, there'll be a loss of water quality. But from the biodiversity side, this reduction in water quality can result in ecosystem degradation and the poisoning of species that live in the river. And this will also be connected to climate change, because this can affect the ability for the river to adapt to climate change and can create a rise in events such as droughts or flooding. So these combined natural capital changes will create financial impacts for the business, such as fines, penalties, or cleanup costs, and also reduce access to water, creating higher water costs for the organisation if this is a particular dependency they have. They will also have impacts to society, which creates links with social issues, such as health issues for the local community or reduced access to clean water. And again, these have the ability to create risks or financial implications for the organisation, such as reputational damage, fines, or penalties. So just looking from this one simple example, it's really clear that when assessing natural capital changes to biodiversity, water, or any natural capital, it's really important to look at the links between them and evaluate what the different trade-offs and synergies could be when doing management responses. And this is all really important information to pass on to investors to show that it has been considered. I'll hand over back to Marty. Thank you.
Thanks, Laura. That was a really brilliant example, and it's something that I took away when we were all first talking about water and biodiversity from all the working groups. Was something that was really the spatial issue, whereas climate change was always something that often was felt much more broader. The sometimes very localized nature of water and biodiversity impacts and dependencies really struck me quite hard. And I should know that I am a forester, but it was like, whoa, hang on, right in the face. I'm really glad that you covered that then. Now I'm just going to loop back into David on social issues. So that was our, we got, we're getting to social, should I say? We covered the E in 2015, and then over the last few years, we've had pressure from some of our board members at CDSB, but also, a real increase in questions coming into the Secretariat from the market. Does CDSB's framework do social? How do I report on the COVID? How do I report some of the transition elements of climate change? We're like, whoa, hang on, we really do need to do something on this. And I'm going to let David tell you what we are doing on it and the time frame. But I just want to say that it's been it's really important that we have done this, and we have got there because of the interconnected nature of the transition David spoke about in the beginning. David, I'm going to give you the floor. Social, please. How have we got there? What are we up to?
Yeah, so I think you covered one of the key points of how we got there, was the fact that, as we've been doing research in-house, and we've also been speaking to people both within our technical working group and, the wider ecosystem that we sit in, is the fact that you can't really separate environmental issues from social issues very often. And this kind of builds on how CDSB originally set out. Initially we had a very, very blinkered almost focus on climate change, but then it quickly became obvious that for many companies, climate change is going to manifest itself in water issues, or it's going to manifest itself in land use issues. And then that means you do need to think about those interconnections between environmental issues and climate change. And likewise, we see this as kind of the natural next step of kind of integrating those social issues into environmental issues. So, there's going back to our blinkered beginning. Climate change, when we think about climate change and we think about the transition that is going to, one can hope is going to happen, the physical impacts, the physical impacts of climate change are not just going to manifest in water, land use, land change kind of thing, ecosystem turnover. It's going to manifest itself in impacts on people on the ground. And, if water scarcity increases in a certain place and you have a business competing there with a local community for water, that's obviously going to raise issues for a company. Likewise, when we look at the kind of transition side, calls across the market, when it comes to decarbonizing our economy, it's about ensuring that those jobs that are lost from the fossil fuel sector, from carbon intensive sectors, that they're replaced by good quality jobs in kind of more green or in the renewable sector. So they're just two examples, but you could continue and we could take in even more. But that was the initial key motivation for us when it came to it. However, as we kind of started doing research more into social issues, we realized that in many ways there wasn't that kind of high quality, mainstreamed, aligned kind of reporting framework there to help companies report on these issues, as we've tried to create with the CDSB framework for environmental issues. And so what that means is that there wasn't that kind of assistance there to help companies. And, that's particularly important because in the moment we're seeing kind of an increasing number of social reporting requirements. So in the UK, obviously, we've got the gender pay gap reporting, we've got modern slavery reporting. You've got similar things in Australia as well. In the US, the SEC are asking for human capital reporting as well. And another key point is that we're expecting to see kind of due diligence reporting requirements coming in the coming years, particularly across the EU. And that's going to change the game when it comes to social issues. So we see that they're kind of expanding the scope of the CDSB framework and evolving it is a kind of, we're hoping at least to provide a kind of a resource there to help companies then get ahead before it changes for them too quickly. So just to give a brief overview of how we have updated the CDSB framework so far. So we are keeping the existing reporting principles and reporting requirements, kind of those overarching big asks. When we were thinking about what information we would need for social issues, if those same 7 principles and 12 reporting requirements covered what we needed. However, when it comes to the kind of the guidance and the kind of like definition side of things, we've had to make some developments. So we've kind of, aligned with key ideas in the market. So for instance, with human capital and social capital, which kind of accompanies our existing focus on natural capital. We've also included, try to align with the kind of already the expectations there of the market, so the UN guiding principles, which is also within the kind of OECD guidelines. And we've also, had to kind of like come up with new schemas to try and help companies understand social issues and kind of like structure the reporting. So we've kind of focused in on 4 groups of people. And so that's your employees, supply chain employees, consumers, and communities. And we've kind of tried to underpin thinking about those 4 groups of people with a frame of human rights, but also with materiality. So sticking with that mainstream reporting model. Also, what's been very important is ensuring that we have that kind of emphasis on stakeholder engagement. You know, we can talk to workers, we can't talk to bees, for instance. So that's a very important bit around developing our reporting there, and also including those expectations around due diligence. And more generally, we've tried to develop, our kind of the connectivity across the different reporting areas, trying to get companies to think about how social risks connect with environmental risks, how your policies or strategies to combat a certain environmental issue, what impacts could they have on social matters. And, you know, that comes from a position of understanding that when it comes to environmental issues, it's often the people that raise it up the agenda for a company. It's kind of people's actions, people's demands, whether that's communities, consumers, workers, that actually make it so that environmental issues begin to hit that bottom line. And, you know, more generally, it's a few years since we last updated the framework, so we've kind of tried to tidy up a few bits. So yeah, hopefully before we sunset, we'll be releasing the updated version, and we'll be taking all the kind of learnings and technical know-how with us onto our next steps.
Thanks, David. It reminds me, I remember when we released the consultation for this, one of the speakers on the panel actually said, ESG, often ESG is seen as the poor middle child, the sort of left out middle child, but actually you need to think about the E, the S and the G all proportionally and all across all of your business activity and reporting. So as a whole, and actually you made me laugh when you said you can't talk to the bees. It made me think back to the book The Lorax by Dr. Seuss, who says, the Lorax out, who's going to speak for the trees, he used to say. So it just made me giggle when you said that, but you can talk to the bees, they might not talk back. Now, I'm now going to ask, we sort of take a slightly different turn. So we've covered the E, the S and the G, but let's be honest, a large part of the reason that CDSB has had to keep going with this work across the years is we were filling a really important gap in the market. We were filling a gap in the market that was left by a large global authoritative body putting in place clear accounting or reporting standards for reporting climate to markets in a way that was consistent and comparable. Now, we would argue that there were already systems in place to be able to do that, but they just weren't being used or enforced, and perhaps rightly, maybe without too far ahead of the time and understood. So we undertook some work on how you would use existing accounting standards to report on climate change, so above and beyond our framework. Sundip, could you talk us through those, please, and actions that people should take on the back of them, if there's any?
Sure. Thank you, Marty, and hi, everyone. So as we've kind of covered already in this session, much of the focus in the past 5-10 years, and increasingly so, has been around narrative disclosure. And when we look at climate, especially the uptake of TCFD in recent years, that sort of focus has been, TCFD, for example, is voluntary, but it's increasingly mandatory. And so reporting around climate matters and sustainability matters is mostly found in the front half of annual reports. But as Bradley's already mentioned right at the start, investors are looking at reporting its full form, its full package. So that includes both what I refer to as the front half, management commentary, narrative reporting, but also the back half of the annual report, the annual mainstream report, whatever it's called in your jurisdictions. And that includes, of course, the financial statements, financial reporting. And so there's always been concerns as to whether investors are actually being provided with a complete, coherent, consistent story on climate and sustainability, and whether climate and equally sustainability matters are being appropriately reflected in the financial statements. And this interaction is something we've been considering for a while. In the past, we published Chartered Waters paper, which kind of looked at that interaction between climate and financial reporting. And it was very much kind of the name, it wasn't in chartered space that we were moving into looking at. But the natural question is, can climate as a starting point be reflected in financial reporting? Now, key in 2020 and 2019, the IFRS Foundation and the International Accounting Standards, IASB, published papers clarifying, although the IFRS accounting standards do not explicitly refer to climate, using the lens of materiality, there needs to be an assessment as to whether climate is material from a financial reporting perspective, both for this idea of magnitude, whether there's a sizable impact as a result of climate-related effects, but also just the very nature of climate or those interactions with the financial statements, or a combination of both, and that comes from IS1 of the IFRS standards. And importantly, although IFRS does not apply in the US, FASB, the standards board over there, have also published a paper considering how users should be reflecting climate and broader sustainability matters within financial reporting. Investors critically have supported this IASB and IFRS Foundation position, clarifying that they do consider climate-related matters to be material and that they should be reflected in financial reporting. For example, an investor group came out in 2020 representing 103 trillion in assets under management. So this is a sizable number of investors. It isn't just kind of a couple here and there, but a large part of the market is now increasingly expecting climate to be appropriately reflected in financial reporting. And just to add as well, auditors and regulators have increasingly started making public comments and commitments to start considering climate within financial reporting. So then that leads to a question, well, actually, are companies already doing this in practice? Well, just a recent report from last year by the PRI found that 72% of companies reporting climate in their financial statements, their reporting was inconsistent with climate disclosures found elsewhere. So this idea of producing complete, consistent, coherent reporting for investors in relation to climate is currently not happening, and companies aren't doing enough. So to this effect, CDSB in the past 2 years has published 4 papers to support preparers in starting to integrate climate into their financial reporting. So in 2020, we published a report, guidance rather, as to why climate needs to be considered and reflected in financial reporting. And that covers a lot of in a bit more detail around standard position and expectations of investors, etc. But importantly, how do preparers put this into practice? And that covers both kind of theoretical ideas around how climate might interact with existing IFRS standards, but also brings out illustrative examples of what this might look like in practice for a number of different industries and sectors. And last year, we published 2 further supplementary papers looking at further accounting standards and how climate might interact with existing standards. And just very recently, I think just this week, we published a final practical checklist to tie together the papers we've published. And hopefully will be a practical checklist to kind of work through the reporting that you're already producing and just ask the questions around whether climate has appropriately considered and where considered material reflected in financial reports, whether on the face of the financial statements or within kind of the notes as well. I just want to add at the end here, kind of the focus so far has been around climate, and that's partly just because it's considered as an issue. That's where Anstetta has started off. But in my opinion, this can very much be applied to other ESG risks. So for example, the IASB paper originally referred to climate-related risks and other emerging issues. So within that and other emerging issues, I definitely put in kind of other environmental matters and social matters. And I think that thinking and that expectation is only going to develop in coming years, particularly as the ISSB, which Rob is going to come on to in a moment, to kind of flesh out their work plan. And so this idea of connectivity between the front half and the back half, not just in climate, but sustainability, is only going to grow in importance and expectation from a variety of stakeholders.
Thank you, Sander. So that's really, really absolutely brilliant work. And the checklist, I think, helps tie it all together really nicely. So well done on getting that out this week as well. So if everyone hasn't seen it, Sander, pop the link in the chat now and go and have a look, go and download it, go and read your own report, go and have a look, see how many boxes you actually tick when you read your own reports, and use that as a conversation starter with others in your organization. Now, the team have been diligently popping links to all of the documents they've talked at in the chat as we've been going along. Please do pop your questions in there as we work through the last speakers, and then we'll get to those at the end for you. But I guess now we need to look to the future. And as our speakers have alluded to, and I briefly mentioned at the beginning, this is our last technical webinar as CDSB, our last technical speaking slot as the Climate Disclosure Standards Board. As of all going to plan, as of the 31st of January, CDSB will be merging, as was announced on the 3rd of November at COP26. We'll be merging into the International Financial Reporting Standards Setting Organization to give the International Sustainability Standards Board a running start. And so we're taking our team and our IP, and we're going to be moving across to the new board. This for us is what we call mission accomplished. Something that's quite rare in the charity sector. We were set up in the absence of an authority body like the IFRS Foundation or the OECD taking action, and with the IFRS Foundation taking us over and inviting us in, we achieve what we set out to do, which was fill a gap and merge it onto a bigger home that can have even more impact. Ravi, tell us what the market should be expecting over the next couple of months.
Yeah, of course. Thanks ever so much. So just some context here. So building upon what Mardi had mentioned, the IFRS Foundation had created the International Sustainability Standards Board, a couple of months ago during COP26, and announced the consolidation of us. And they're very much going to be building upon two prototypes, which were developed by the Technical Readiness Working Group, which the IFRS Foundation had convened on such matters which Mardi had just mentioned. And those prototypes revolve around the following two areas. One is a general requirements document, so very much following the IAS1, the presentation standard. It gives a preparer and a user of the flavor of what is expected from an entity if they need to go about disclosing material sustainability information to the investor. So it's structured around the TCFD, so that they're using a building blocks approach here, and also takes on board qualitative characteristics of useful information from IASB. So that's one of the documents which they're looking to push out quite early doors. And in addition to that, there's also the climate standard, a climate standard. So currently working upon that prototype at the moment to push out into the public domain. And both those documents will be exposure drafts. So that's ultimately what that means, is that you as a preparer or a user have the opportunity to actually comment on these documents, say, oh, this is great, however. So please do take that that opportunity to interact with the IFRS Foundation on this new initiative, because this is your opportunity to actually engage in that process. But this doesn't mean that you wait until the standards are out there. Okay, we just don't have time. As the previous speakers have mentioned, we're talking about really important things here. There is a bit of a ticking time bomb on quite a lot of these sustainability matters. And the IFRS Foundation has been very cognizant of the body of work which they're consolidating. One is from CDSB, another one is from the VRF, which comprises of SASB and integrated reporting. So I'm going to be really technical here, okay? So when it comes to the general requirements standard, there's a particular paragraph 70 and 71, which shows a hierarchy of what to do in lieu of a particular standard, okay? So in lieu of a water standard or biodiversity standard or a social standard, like use what's already out there in the public domain, which has a similar conceptual framework to the IFRS Foundation. So use the content by CDSB. My colleagues have done a fantastic job of explaining why these are significant matters. So social, water, biodiversity, they're really rich content. Use it at your leisure and really start to implement such thinking in your companies, because the IFRS Foundation, I hope, will be a bit of a game changer for this, because just like we've seen from a financial reporting perspective, they are mandated across 144 jurisdictions. They create a global baseline. We're looking to actually do the same from a sustainability perspective as well. create that global baseline for clear, consistent and comparable information, and ultimately address, a bit of a ill of this, this area, which is greenwashing. So we really need to get rid of that, create that global baseline, so then, companies ultimately can be compared with another on really meaningful and prudent, information which goes into the public domain. So hopefully that's of some assistance.
Great, Ravi. When are we expecting the consultation of the general requirements and the climate prototype?
Q1. Sorry, I should have addressed that. So Q1 of this
year.
By
the end of Q1, this should be out there. So this is a call, ladies and gentlemen, for everyone on the line today. When that comes out, to get it, to read it, to engage and tell us what you think. Now, Ravi, I have a question from the chat from Nina. What is the ISSB view on double materiality lens for corporate reporting? Can you pick that one up for me, please?
Yeah, of course. It's a really interesting perspective, and hopefully I'll be able to address this here. So from a double materiality perspective, in fact, I'm just going to focus on the IFRS perspective on materiality, which is very much in alignment with IASB. So their constitution is very much focused on financial materiality. But what I would suggest you look at is a really interesting paper which was released a couple of years ago by the Group of Five, and it introduced a concept called dynamic materiality. There's very much a 360 interaction between a company and its impacts on the wider space, such as the environment and society, and how that interacts back into the the reporting entity. So there's very much an interaction. I think there's a wider debate on double materiality or dynamic materiality, but from my perspective, it's very much communicating at the same thing. So if you look at the actual climate prototype, it goes into elements which would be deemed as double, as impact metrics. So what are your what is your impact from a scope 1, 2 and 3 perspective? 3 is quite impact orientated. So there's definitely a relationship between all of this, and the IFRS is very much taking a dynamic materiality perspective, and you can really see that in the prototypes themselves.
Thanks, Ravi. And that Group of Five paper is actually really helpful for those people that want to understand how the various standards and frameworks fit in the market together and can be layered on top of each other to cover dynamic materiality as a whole, but also just for enterprise value or for wider stakeholder materiality as well. So if you haven't had a look at that, do take a look. It's a good starting place. I haven't seen any more questions in the chat, but I was just going to flag up that Ravi really clearly mentioned then that there will be a general requirement standard that can be used for any issue once it's out after exposure. I'd encourage you to look at that general requirements when it comes out, and start thinking about how you can apply that to issues beyond climate change, because the IFRS Foundation and the ISSB will be doing that very, very quickly after this time. It allows you to start getting ahead, getting organized, getting your material. This takes time in a business, and the later you leave it, it costs more money. Samantha, you have your hand up. Do you want to ask a question? Please do unmute yourself. You're very welcome. No, pop it in the chat too. Are you there?
Hello.
Fantastic, Samantha. The floor is yours. Ask away.
I was just saying thank you very much for all of this. It's fascinating. I just wanted to say my eldest daughter has got her own portfolio of shares now, and she's just taken a geography A-level. So I just wanted to say it's all important, the young investors coming into that they're looking at all of this, what companies do, what they're about, how they treat the workers, the young investors and the investors coming into this are demanding this, basically. And I also wanted to ask, have you thought of the circular economy, like a disclosure checklist for companies on thinking more about where their resources, the raw materials have come from, getting them to think about the circular economy, reusing, and the end of life of their products, like capturing the end product after its life, to get it back being repurposed or reused or retrofitted. Sorry, that's a long question.
Not at all, Samantha. I mean, you've actually hit a big, drawn out a very important part, which we know companies are starting to feel, and that's the younger generation, and they are very interested in a company's not just financial performance attached to these issues. They want to know how they're transitioning, how they're changing, but they also want to understand, a bit like Nita's question, the wider impact, the dynamic impact that they're having on the market. Ravi, do you want to take the question from a circular economy perspective, please?
Yeah, of course. I think it's very important to have this sort of systems thinking when approaching all of this. So very much having a cradle to grave sort of understanding. And what you'll see within the actual application guidances of both water and biodiversity is that we very much do take a circular economy way of thinking, especially on impact. So the impact on like climate, water and biodiversity, and the ultimate reduction of waste or particular pollutants can ultimately have a benefit on those different natural capital assets, so whether it be water, biodiversity or climate. So I think ultimately what we're striving for is that to reduce a business risk. There are multiple ways for a company to actually address this, and one of those ways could be how to actually recycle more and use use the concepts of circular economy. So that was a great question. In fact, I welcome any other thoughts from the team on that.
David, this strikes me, this is one that you've got some thoughts on.
Yeah, sure. So I think in terms of what we've been doing recently to the framework as well comes into this, because I think that kind of idea of circular economy also speaks to the kind of like various interconnections that exist between matters. And I think it's also a great example of one of those win-wins for companies in terms of it's just cost saving. It's a great opportunity. And I think many companies are beginning to realize that in other areas as well. For instance, like when it comes to climate change, when we think about energy efficiency gains, like that's just cutting money off your gas bill or your energy bill. And those have, it's one, it's good for the environment. Two, it's good for your kind of like the market's perception of you. And three, it's good for your bottom line.
Thanks, David. I can agree more now. I've got another question in from Austin Kennedy. I think this one will be for Ravi, but I welcome the rest of the team to contribute. Possibly I might have to pitch in on this one. Can you at all comment how the US might incorporate this work being done by the ISSB? Are we anticipating nothing? A watered down version of standards? A robust but separate standard? US GAAP versus IFRS accounting standards type approach? Anyone got any insights? And this will all probably be very speculative. So Chatham House rules on this one.
Oh, damn it. So yeah, thanks so much, Austin. A really loaded question there. I think it's really important that what we're talking about here, climatic issues, social issues, these are very global issues which need collaboration. So I, for one, would be. It would be sad if there was some sort of departure in finding a very much a collaborative effort in trying to address some of these issues from a global standard perspective. And the IFRS Foundation, when developing the ISSB, it very much has that global perspective. It really does want to make this a global baseline across all jurisdictions, including the US. So I think as we're developing this, when we go into the IFRS Foundation, we just need to be very cognizant of that. So Mardi, welcome your thoughts on this.
I just say, I mean, I think it is a good question, Austin, because the last thing we need is further fragmentation, particularly as companies are global and the impacts of what we were talking about are global. And through the development of the prototype over the last 6 months, there has been intensive engagement with the SEC on the prototype. I know they're seriously looking at TCFD, and TCFD is integrated right the way through the prototype and the climate standard that will come, the first climate standard that will come out. So the first climate standard, which, as Ravi said, will come out by the end of Q1, includes, thinking back to the prototype, the same again. So it includes CDSB's work, TCFD, IASB, VRF, which is again SASB and IARC, and also the WEF IBC metrics, which are very sort of American-led in nature as well. So we do have that full cohort of information, which I think will go a long way to supporting the American regulators in taking this approach. But we are engaging very much from the beginning, and we cross our fingers tightly that we won't get further market fragmentation, and we really do, help consolidate and create a global floor as part of this next endeavour.
Marty, quickly, just as well, practically speaking, even though the US and any other jurisdiction that doesn't follow the IFRS accounting standards and hasn't adopted it, it doesn't prevent them from still then adopting the sustainability standards. Equally, all jurisdictions will need to adopt it to make it a mandatory regime for companies to report again. So that process still remains the same, just practically speaking.
Exactly right. You've got no excuse not to do it. That's exactly right, Sandeep. It doesn't matter if it's regulated or not, if you get standards, there is something there to help you do it. And in the absence of that, use the CDSB framework. Now, another question in the chat about being bombarded by software companies claiming that companies would be able to keep track of their ESG data. The question is, who is going to audit this data? Will all the software platforms use the same standard? I think we're going to need to move to a standardized set of taxon. I think that's the taxonomy. Everything's moving so fast, lots of questions. Like sort of standard platform. Do we need to move towards a decentralized system to work with credible data? Anyone in the team want to take that? I can say that we will, much like the financial accounting standards are currently set up, that they're released with an XBRL sort of tagging system digitally sitting behind them, so you can find the information easier. The new sustainability standards will also be released from the beginning with tags on them. Essentially, I think of them, I'm not very techie, so I always think of these things like barcodes for words and information, so you can kind of find them faster and allow them to digitally move around everywhere. They will come out with these XBRL standards attached to them that will help with data platforms and moving data around. Ravi, Sandeep, David, Laura, anything to add on this question?
I can give it a go, and then I'm pretty sure someone will say a better response to. So with respect to this, I been bombarded by software companies claiming for the companies. Question about who is going to audit the data. So I think it's really important that there needs to be consistency in not only the narrative disclosures, but also the underlying metrics as well. So what are the actual underlying data sets which are driving this? Because that forms part of, a company's disclosure to its investor. And you can only really get consistency from one company to the other if there is consistency in the underlying methodologies which form part of that. So if you look back at the actual climate prototype which was released a couple of months ago, it was supported by a technical guidance, and that technical guidance is pretty robust, and it tells you like what should a preparer do from a methodological perspective when implementing scope 1, 2 or 3, for example. So it's that sort of consistency which I would hope brings some sort of which companies are able to actually pull. And I would also hope companies who are purporting to actually provide ESG data, that they very much leverage leverage content from a technical perspective, from what the IWSB will push out within the actual underlying methodologies, so that you know, that what they're selling to a customer is ultimately in accordance with this international standard. Welcome thoughts from the team on this.
Just to quickly, I guess, add an assurance perspective, I think the intention, as a prototype's been developed, as the exposure draft we put out, is that whilst, you know, the first and foremost audience for it are the preparers in terms of those who are actually going to prepare those reporting requirements and standards, reporting in the annual report, there will need to be interaction, and there already is interaction, as I understand, with the accounting and assurance standard setting in terms of ensuring that whatever is being requested from a preparer's perspective is then assurable. And that thinking, I think, will still need to develop, because it is a new space also from an assurance perspective. But similar to financial reporting, there is a role for assurance to ensure that whatever is being reported publicly is credible and useful, and something that investors can rely on.
Thanks, Sandip. And I think we've got time for just one question. And there's a question in the chat: how are we engaging with other bodies such as the TNFD, the EU, other taxonomies? And I can catch that one off. So as part of the Technical Readiness Working Group, we have been engaging with the European Union, for example, the whole way through the drafting of this process as they're thinking about their new standards, taxonomies, and governance work. We also, Ravi and I, and Laura, were involved with the Technical Task Force for Nature-related Financial Disclosures pre-working group, very much involved in leading and chairing one of those work streams to sort of give it the running start for their task force when it was set up. We're very familiar with their work, and we look forward to, you know, getting their feedback on the standards as we move in that direction. They will not be, you know, we believe they will not be reinventing the wheel, and we'll be looking to the ISSB to be putting a global set of biodiversity standards out in due course. So looking, and their framework will also come out soon. So these things are all designed really to build on each other, not duplicate or replicate each other. So very much the ISSB is talking and listening to many, you know, the ISSB is only just coming together, but the stakeholders that made up the organizations that are coming into the ISSB are very much listening and engaging now with all these audiences. What do you think of MEP Duran's proposal to split the provisions of sustainability assurance and financial audit? This is a topical one, Cecile, and I love it. I knew you would have a good question. You always do. This is a very, very good question. And we're starting to see some of this as well in the UK with the splitting of some of the service of the firms. Sandip and Ravi, David, Laura, do you want to comment?
I think if it's material information to the investor, it should not be split. So it's part of, you know, that ultimate, you know, it's information to one stakeholder group. So it should be part of the overall assurance process by the principal auditor, would be my perspective on this. You could fragment the other parts, but when it comes to material information to the investor, it should be dealt with as one lump sum. Sandip?
Yeah, I was going to agree. I think I'm an auditor in previous life. When you're working through your financial audit, you'll be privy to certain information, you'll learn certain things. It makes sense, at least from a practical perspective, that if you're looking at an investor perspective, that you also look at those matters that impact the financials and our material. This is, you know, ultimately, if you're looking at this from an investor perspective, you need that complete, clear and connected picture. And so at least at a starting point, having the same auditor, same group of auditors makes sense.
Thank you all, and thank you to my team. And just, I mean, it speaks directly to connectivity, doesn't it? And the need to keep these things connected. It's hard to keep the tires on something if they're in different places, produced by different people and not consistent in the first place. So I'm going to have to draw us to a close. That hour went very, very quickly. If you enjoyed it, we have another one with the same sort of content this afternoon. Do visit us again. But now I have the sad task of telling you that, as I said earlier, we'll be sunsetting on the 31st of January this year, but we wouldn't do that without a party. I think you all know that. We would have loved to have it in person and have you all with us. But given the current pandemic situation, we are having a virtual party, inviting all of our friends to join. So please do sign up and come, and here the links are possibly on the next slide. We will have big final event. It's on our website under the events page. You can go sign on it, come along and join the conversation and have a few laugh with us and maybe shed a few tears as we follow along the CDSB journey, warts and all, from 2007 to 2022 when we achieved our mission. Thank you all, first of all, for supporting us and following our work and using it. We really appreciate it. We really appreciate the feedback, the questions, the challenge. It's what we've always been about, is pushing things further and creating solutions that can fill gaps in the market that can have meaningful impact. And I would be remiss if I didn't thank my fantastic technical colleagues on the call today, as well as the comms colleagues running this call, for just all of their hard work in making this happen. When you're really working ahead of your time, it's not always easy to know where to start or where to go, and even have friends to talk to on the topics, and even your friends and family don't even really understand half the time what you do. So I think it's been a huge challenge for them. They've pushed out some absolutely phenomenal work, as you've seen today, and I thank you a huge amount to my staff and the team. You inspire me every day, and so thank you for that. Thank you all again for joining us. All of this material is available on our website. The links will be there afterwards as well. As I said, you can tune in again this afternoon and join us last Thursday for what will be absolutely the last time we put the Ruban red dot up before we sunset it completely and move on to have even more impact. Thank you again, and enjoy the days wherever you are. Bye-bye.